But now we're moving on to put the spotlight on BSE. BSE actually did pretty well in the first quarter. Numbers showed sequential improvement, whether you're looking at revenue, whether you're looking at margins. So very quick sequential recovery as the dust seems to be settling on a lot of policy changes that, of course, have gripped stock exchanges. So we have with us Mr. Sundararaman Ramamurthy, Managing Director and CEO at BSE. Mr. Ramamurthy, thank you so much for joining in. Good morning to you, sir. And I want to start right there. Investors are taking faith and, they want to believe that the worst of this policy action impact is over. However, we know that there is still a lot in the air in terms of looking at maybe moving the weekly product to a fortnightly product. I'm talking about the index expiry, options expiry. So tell us where you stand as of now with the sequential improvement. And if indeed we go to a fortnightly expiry, then would that be really disruptive for the business and volumes?
Good morning. Thanks for having me in your studio. As far as the regulatory policies in India has been a continuously evolving process. It's a co-created process with proper consultation across market participants. Objective is common. Objective is investor protection. So I think policies have been coming and been evolving and will continue to evolve. As far as the weekly expiry versus fortnightly expiry is concerned, I think SEBI chair has already clarified on this matter. So any question on this and any reply to it will be extremely speculative and an answer to a speculative question.
No, sir, no, I'm not asking you to predict, sir. No, sir, I'm not at all asking you to predict what SEBI will do or will not do. We also did a story. Our colleagues, had some inputs on why this is being considered, the move from weekly to fortnightly. We're just trying to understand that if such a shift does happen, what can the impact be? It may not happen, that's fine. But, as the business stands right now, will it simply halve the volume if it's fortnightly, or will it not impact the volume because people will simply trade that much more? Maybe not every week, they'll trade that much every once in 2 weeks. So just from a structural perspective, what the implications could be?
While I appreciate your eagerness, the starting point is still a speculative situation. That if it happens, so we have to deal with it as and when it happens. If it happens, what we all know is whatever is good in the interest of the market is what the regulators will do. So therefore, we need to wait for what the regulatory thought process is, more so because the regulators have clarified.
Mr. Ramamurthy,
if any reply were to be tried by me now, it is based on a speculative thought process.
Mr. Ramamurthy, good morning. Prashant here. The last time I spoke with you, hi, good morning. I asked you about whether the regulator has asked for any information. This is, of course, I think it was in the month of June, right? Whether has asked for information about trades by entities like Jane Street, etc. You said, well, you should ask the regulator. Early July, we got the order as far as Jane is concerned from the regulator. So, but anyway, I mean, you can't talk about what we don't know yet.
The order vindicates my stand. I gave a reply as well to that question while it is between, what I told was something slightly different.
Yeah.
I told you what conversations happen between regulator and regulated are confidential.
Yes. Notwithstanding
that, at this point of time, there is no investigation on BSE is what I have stated.
Yeah.
The order stands testimony to what I stated.
Absolutely. Let me just get you this, right? What is your own expectation, right? I mean, I think we last week spoke, you told me that you're increasing penetration with brokers. I mean, that's a big area of effort, right? Getting more players on board on the BSE platform, making their life easier for you to be able to trade, etc. And it's true. I mean, actually, since the first round of these, if I can call it options, derivative market reform in that sense, happened late last year, it should have hurt, but actually BSE's gained market share since then. You're at about 20% share, I think you're at about 25% of the market. What is your assessment, notwithstanding what may come from the regulator in terms of market share, that BSE will continue to, any endpoint, not endpoint, but any target in mind with regards to market share, Mr. Ramamurthy?
There are three targets which we have. all of them may result in good market share, but market share in itself is not a target. The first target is deepening and broadening of markets, which is very, very important for us. What I mean by that is, we today do not have as many number of participants as we would like to have. We started with 0. Today we have around 500 members. We feel we should increase it to 800 members in derivative segment. We started with almost 0 FPIs. Today we have around 330, 340 FPIs. We are targeting at least 500 FPIs should come into India to trade. So at least with BSE to trade. They are already in India, but they are not with BSE. Also, in terms of products, we feel that it should be more monthly mix, more next week, next to next week, next month, long-term contracts, futures. They all should be there in place. So this is what we call as deepening and broadening of markets. And for that is the next goal, which is serving the economic purpose of a product. So the purpose of the product should not be just simply making people trade on expiry day. It should be much about a long-term view on the market and how to ensure that it helps in hedging or an arbitrage in bringing level playing field between the two segments. That's the second goal. Third is customer delight. What we can do in terms of products, services, feature, functionality to ensure that the people who are not there feel that they should come to BSE, and people who are in BSE find it more meaningful to be continuing to be stuck to BSE. These are the three goals. These are the basis on which we are working on. Every one of our action can be linked to any one of these objectives. Will this result in increase in market share? It may. Why? It's a catch-up game, right? We were 0. We had no product. Today we have a product. So the product starts growing slowly. When it grows, when you're comparing it with the market share, it happens as an increase. As I told, it's actually strictly speaking incorrect, because every product is a 100% market share. You cannot take two different products, put them as a common denominator and consider a market share. Nevertheless, since most of people talk about market share, this is our path.
Mr. Ramamurthy, like last time, nicely done, I must say. In every product of BSE has 100% share. But yeah, I mean, point taken. You're saying 3 goals which may lead to market share gains, but this is the effort at the exchange. Point taken. Nigel.
All right. Hi, Mr. Ramamurthy. Nigel on this side, and good to have you on the show as always. Let's talk about some things that are in your hands, like the clearing cost. Now, a higher proportion of trades are being cleared by ICCL, which in turn is reducing your clearing cost. So could you tell us, as a percentage, what is it at? And is there further scope of reduction?
I do not know what is the percentage that clearing corporation will be knowing, because it is who they are having as clearing members, and it is an independent entity with its own board. So I would not know what is the percentage market share that they have. But our efforts have been to help them in putting a system which is capable of surviving and growing and sustain itself. I'm not sure whether you are aware, when I joined, my clearing corporation had a capability to trade just 50 trades per second per broker. Today we have significantly enhanced it. With 50 trades per second per broker, if I introduce derivatives, no member who is already even associated with ICCL, even though they are very at time, will be able to clear any trades. We have to increase our clearing capability. Today, on a rough basis, what I can tell you is, we can consistently manage 13,500 trades per second per broker throughout the day, and for longer bouts 25,000 trades per second per broker without any latency. A peak of around 72,500 trades per second per broker with a latency of around a second is possible. That is what is the system enhancement we have done. Any system enhancement of ICCL, as a person who have been in the market for a long time, I would certainly like to guide them and do whatever best I can. Market share and all is that entity's lookout.
You know, because you're focused on the clearing cost, sir, that's why I asked you about that. Because now I think the clearing cost would be as much as NSE, I'm guessing, because it's come down drastically, isn't it?
I wouldn't know, but what I can certainly vouchsafe is their capacity has significantly gone up.
Okay, all right. Okay, all right. Let's focus on the SGF contribution. In Q1, there was no contribution, but various brokerage notes are assuming 5 to 6% of the transaction value this year. Would that be a fair estimate?
So that is a fair estimate which the brokers are doing based on what has been the past. In fact, we have done an exercise where we have seen what is the complex algorithm of computing SGF is different. It is there in its place. Notwithstanding that, for an organization, if it has to avoid jolts of sudden debits to P&L, how do we go about? So when we make a rough estimate, we find around 5% to 6% is what gets into it. We may find a mechanism to periodically contribute to the SGF so that it is all not concentrated in a single quarter and gives very different impression about that quarter alone. That work is in the offing. We are taking approvals and then we will be doing the needful.
Sir, that brings me to where the operations have now stabilized with all the changes. I mean, now we're down to the one product per week expiry format, at least as of now. So if you could tell us, what that has meant in terms of volumes, I mean, overall traction in Sensex volumes, and BankX, it's not, because it's not a weekly product anymore, are you still seeing some build-up, or, what is your assessment there? And then, overall margins, because with all of this finally stabilizing and the SGF, the Settlement Guarantee Fund, those costs being where they are, you've come back to 65% margin. Is there scope for improvement?
So first let me talk about BankX and then I will come to margin. As far as BankX is concerned, you made a very important point. When it was a weekly product, it was seeing a lot of volume. When it is monthly product, it is not seeing as much volumes and volumes have dwindled. What we find is there is interest in BankX in the expiring week. More the preference is towards a weekly expiry type of a BankX, which is exactly what we want to change. We feel that there is a lot of merit in the market participants looking at a slightly longer time horizon to trade this product. In fact, if we look at the Indian derivatives history, we started with monthly. Suddenly, somehow the focus has become short-term across the globe. And some of the developed markets trading more than 60% of their volume on the expiry day as 0 DTE. I think as market participants, we have a responsibility to go back to the market participants to bring out what are the importance of using a monthly product as it is, which is exactly what we are doing. We are planning to do more. That will help in the mix changing and more institutional participation coming in, and therefore a better economic purpose being served by the derivatives. That work is on, that we will do. As far as the margin is concerned, we are not looking at increasing margin or stabilizing margin. Instead, our focus has been on diversification of our revenue streams. What we would like to have is more of cash equities volume, because we are not growing greatly there. Our market share has not been there. I would certainly talk about market share because the products are same. There our market share has been small. I have always been thinking that if our market share goes up there, it will not be a cannibalization of the other exchange, but it actually by growth in the entire market pie. I have been proved right when I went up from 5 to 7-8%. Now what I am talking about, actually the market size in itself has grown, which I feel strongly about because of multiple economic reasons, which I can elaborate if you were to ask me a question there.
So sir, tell us, if you could give us, sir, if you could give us some sort of an aspirational path on both these fronts, market share, your aspirational market share, and what are the inroads you think you can make in the next 1 year on the cash equity side, and also say the BankX, where the volumes are right now languishing. I mean, what kind of monthly volumes would you aim for, say by the end of this year, as your conversations with market participants and all of that starts bearing fruit?
In terms of BankX, I will not give any volume target because that has not been our approach. In terms of cash equities, we want to have consistent double-digit volumes. At least it should be 12%, 15%, 20%. I'm not aspiring for a 50-50. Then that would tantamount to cannibalization. Interest is not in cannibalization. Interest is in about growing the pie. The pie will grow large, very, very large. Why do we feel that? Because if we are talking about a 50 trillion market cap by 2047 and a 30 trillion GDP, it cannot be with this 5,500 companies listed at BSE. It has to be more number of companies coming in. Are we telling that this 5,500 companies will have such valuation? They themselves from 5 trillion will go to 50 trillion.
Yeah.
Cannot be.
Sir, right now...
Mr. Ramamurthy, point taken. Point taken, sir. Sorry, we're jumping in and interrupting you. You know, on the derivative side, right, and without going into what the regulator may say or not, do you believe, and the concern has been that the volume of derivative volumes here in India as relative to the cash market has been absolutely disproportionate compared to any other market, I mean US or any other market in the world, and you know the stats very well. Do you think for the foreseeable future, that ratio has kind of completely peaked out and the direction of travel is more normalization? Would you agree with that statement, sir?
Unfortunately, I am not in a position to agree with you, Prashant, and I have been telling this multiple times in the marketplace.
Right.
When we are talking about US and we are telling cash to derivatives volumes, in US there are multiple exchanges, multiple dark pools, multiple trading platforms. All of those volumes are never measured. Neither the denominator, there are OTC products, there are internalization, neither the denominator nor the numerator is a number.
But sir, even if you add all the dark pools, etc., I'm not advocating for one or the other.
How
but
do
even
you
if you
add the dark pool? You may have the data, I don't have the data.
Okay.
The
So,
dark
but you're
pool
saying
per
you
se
can't...
does not publish you any data.
Correct. You're saying you cannot, it's not possible. You wouldn't say that ratio is peaked. I mean, you would not say that in that sense, right?
See, what I am not able to measure, based on a speculative thought process, it is more. I will not be able to do anything.
Okay.
I am only saying, with lot of dark pools and platforms, the numerator and denominator both are not known in US. How do I compare with it? What is visible to me is the option premium traded in India and the cash market volumes. If I were to compare that in India, it's a fraction of the total cash market volumes. What is visible to me is the number of investors in derivatives market versus number of derivatives in the cash market. That's a smaller volume. Is it true that retail investors are losing money? Honestly, yes. Does that mean the options have peaked out? Very difficult to say. No, the parameters do not indicate that. So it will not be possible for us to conclude that compared to US, we are doing more, we have a skewed ratio because of the point that I explained. The second, based on the Indian data, which is very clearly visible, we are not able to conclude that we have peaked out on volumes.
Okay, got it. Mr. Ramamurthy, getting ready for the NSE listing, sir?
No, this question has been asked to me by CNBC in the last 3 interviews. Always I have told it will be a matter of great pride for me, no, because I was one of the people who joined NSE in the initial days. It will be a matter of pride. NSE is a prestigious institution. To have it listed is a matter of pride. And BSE will feel honored, naturally.
And of course, I mean, it'll be a big event in terms of business as well. I mean, 5 lakh crore market cap, right? I mean, in terms of valuation of the NSE. So it's going to be a big one when it lists on the BSE. We, of course, track it.
I think as of now, one of the highest traded stocks on the BSE is the BSE. Yeah. And on the BSE, one of the highest traded stocks since the time of listing is NSDL in the last few days itself. Well, Mr. Ramamurthy, we appreciate you joining in and giving us all of those details. We look forward to having a chat with you rather soon. Thanks a lot for joining in.